What's good, everybody? I just wanted to make an update for VPA. I've finished Volume Profile, the book. I was watching one of my earlier videos here. This one right here. And I just wanted to make an update for VPA. So here, let me get the... I should have got this beforehand. But no, the knowledge is pretty good. Actually, I put VPA inside the Discord. So this is VPA Volume Profile. This is something that you guys have to master. This is why. This is exactly how I predicted that there is going to be a crash coming in Bitcoin. Look, this is the Discord group. This was... And I do this all the time because I understand the volume, psychology of the markets. It's really, really good. So you can see the time here on the left-hand side. It's 2:26. The market was coming up. What I said is I'm going to bet some over-leveraged longs on this last breakout we saw. And then I posted the picture. This is the hour chart. I should have posted the 15 because that's the one that we do. And so I replied to my own comment here. I'm going to bet some over-leveraged. And then, boom, that's what happened. Because here's the thing, you take a look at the volume here, there's not a lot of like support volume. You can tell people are from this pattern right here. This is called a bull flag pattern. They enter like right here, These are all over leveraged longs. We're talking like 100x, 50, 25x. Those are all they just... So that's what happened. And this is the 1 hour chart. This one's a nice chart too. We can actually take a look at the update right now and see how the 1 hour chart is doing. The 15, and I'm at, oh wow, so we actually broke that that low. That's interesting. So this is how I have the MM pulled. There could be this one here though. This is the macro. I would probably use it on a daily or something like that, or just double it, right? Double it is a good idea too. So this is MM, and MM is also our next strategy to use in the markets. So VPA, in my opinion, is number one, because you get to understand the psychology of the markets. What are the market makers doing? If you guys haven't bought the book Volume Profile Analysis by Anna Cooling, I would read the book again. I mean, I read it 3 times, and you have to meditate on like what the market makers' plans are. This is just basically my understanding of how the markets work, a little bit of psychology in here. These are my notes, and then pretty much we have patterns and then tradable setups. This is what I want the team to be working on, building tradable setups through these analysis. This one here, what's it called? Testing volume, the volume pattern. Gann, W.D Gann, I have his book right here, and like 7 other books of his. He uses this pattern as well, but he doesn't call it a volume pattern. He calls it something else, like topping volume. And actually, if you use the daily, you can see it very clearly. I'll show you an example real quick. So let's clear this for a sec. So you see how the market starts losing steam at the top here because the angle is starting to descend. So it goes up sharply, right? Sharp, and then we start actually going sideways with smaller moves. That's exactly what it means when the market loses momentum and loss of motion. And right here you got your volume confirmation and then huge tank. This is, again, I'm going to get really, really into Gann's knowledge. Obviously, I have his books. I'm going to study them. I'm going to study his rules, and I'm going to make trading patterns, profitable trading patterns. I'm also going to spreadsheet every single trade of mine, like you should, So like this was one of the rules in his. This was like rule number 3, I think. This one right here. Yeah, and it was valid. It came down, and then another rule was this one right here. So this is the secondary, after a sharp decline, this is the secondary pullback, right? So anyways, let's talk about, this was a nice move too, that one too. They're all very, very nice fib pulls, right? So that's the next channel that we're building right here. So we have some in the community that, this is a study group, by the way. This Discord here is just for studying. That's why I recommend, if you have the book, either Measure and Move or Volume Profile, post in the comment below and like all these guys have studied this material, you know. So this guy Steph, as well as Coinbase God and a couple other, this guy here, have studied this one very, very well. So I have that one in my docs too. I just finished it today, this one right here, but it's mostly words. Volume profile, if I open this one here, I just wanted to, you know, update you guys on how it kind of looks. So first things first, we went into the chapter ones, chapter one, and then what this book talks about is basically the market experts, right? So Dow basically created technical analysis, right? And then there's Wyckoff, which is a guy that came after Dow, which had three principles of the markets, okay, or three laws, I should say, of the markets. And the first one's the law of supply and demand. Of course, he came up with the accumulation, the distribution, but anyhow, this one's important. This is something that you need to meditate on. The law of supply and demand. This is the balancing of the scales right here, okay? The next is, look, the three laws that control the market here. So the first one is law of supply and demand. The second one is law of cause and effect. Okay, the reason why someone would enter a trade. And what I believe in the markets, the reasons that people enter the markets, the professionals anyways, the algorithmic traders, is because of Fibonacci, measured moves. Also for some other reasons, right? Trend lines and stuff like that. But the cause and then the effect. And then the next one's really interesting as well, because it's the next thing that happens. So what happens after you open up a trade, or a professional, a bot open up a trade? It's called the law of effort versus results. These are really similar, but number three is what happens after the cause, and the effect, right? Is the effect going to continue, or is it going to stop? So effort versus result. In order for you to have a continuation, that's the result that we're looking for, continuation. The effort, volume, has to continue. You know what I mean? It's like having a conversation with someone. And that's what I like, why I like technical analysis so much, because like everything is trends, in my opinion, right? So you're having a conversation with someone, right? This is valuable life skills that you can. So you're having a good conversation, and then you're uptrending, right? Uptrending, and then at one point you there's no more effort, you know, or interest or volume, right? Tone that would affect the conversation. So it either starts to fall down, and you know what I mean. So that's the effort versus result. So yeah, these laws are really psychology. They're laws. So that's where you can really connect with the mind of the market. You have to be in tune with the market and really read it. Right. So then after, it's just basically this one. That was just chapter one, and I summarized everything, guys. It's a 300-page book. You know what I mean? So the least you can do is like read these things. You know what I'm saying? So that's what I'm saying. I think I might be making some cuts. I know it's summertime, but we'll see. We'll see. I just need to. We need to have like a good community of people that are willing to take the time and study and build tradable VPA setups in order to, like, I've got a couple in my mind that will have a high probability and good risk reward. Okay, let's talk a little bit about the MM. So all these are basically patterns, right? And the thing I like about VPA, I'll show you a picture here that basically explains what I'm about to say here. Excuse me. I think it's bear state. I put in this one. Yeah, so you take a look at this picture right here, right? That basically explains the whole book, right? In a picture. Picture says 1,000 words, right? So we first start off with the accumulation phase, and might as well go ahead and show you guys real-time market. Excuse me. This is Bybit, by the way. I trade on Bybit nowadays because Binance basically screwed over Canada, whatever. So anyways, you take a look at this little accumulation zone, right? That's accumulation right here. you could have thought this was all accumulation. That's more of a range, which we have in, this is also a range. It's called support and resistances. Anyways, it's in here, support and resistances. And this is a very good idea of the market. So this is another way of looking at the market in terms of phases. And within all these phases is the market, okay? And if we can isolate every single phase, we know when to trade and when not to trade. One of the rules in MM was to sell in May and go away. So I called that to a few of my groups, and this is why I think I need to make my own group more focused and more specialized towards this knowledge, because if I post it in here, it's gone in 3 minutes. You know what I mean? So sell in May and go away. And then I called it also in Bullet's group. I like Bullet. I respect Bullet a lot. But yeah, this is what I've been working on for the past like 7 months, man, and it's even more. I've read this book like 3 times. So let's go back into this picture here. So first off, it starts off with accumulation, okay? Accumulation, and then finally, there's not enough supply, and then the market starts breaking upwards. If you haven't seen my matrix video, you'll understand why, the cause of demand. There was lots of buying right here, buy power. Also, if you take a look at the daily, this is in the VPA strategy, and also Elliott wave theory. I'm also going to post some things on Elliott wave theory to really simplify it. This one right here. And it's not going to be complicated. It's just basically based on Fibonacci. So if you like measured moves, that's going to be for you. But you have to know how to count in order for you to know the right pulls. So if you have the eye for that, that could be your strategy. We need traders and analysts in all different directions. My specialty, like I said, is going to start off with being volume, because I'm really good at reading the market like that. But there's also time. People need to look at time. You know what I mean? Like, I can't necessarily look at I can look at everything, but it's cool if you have a team. You know what I mean? So yeah, anyways, Elliott wave, this is the 4th wave in my opinion, the end of the 4th wave, which means this is usually where the market finds support. And we never broke past down this low point right here. It was absolute support. This did a double bottom on the support. So that's where I called it here in my group. I said possible triple bottom. Did I get in? I was still studying at the time, but I had a little bit of money on 100x. But no, I didn't pull the trigger in time, because the next day it just shot up like 7 or 8%. But yeah, that would have been a really good trade, because I was waiting my risk, right? 100x leverage only gives you about 0.5% stop loss. I was waiting for my risk. It was about 3% at that time. I said, well, I can go down to like 20x. That gives me about a 5% stop loss. That would have been good. But I ended up just waiting for the confirmation, and then it just, I don't know. But yeah, I was studying and I was doing this right here. So once I'm just focused on the market and trading, that's going to be really interesting, because I'm also going to do spreadsheets. I'm going to cover it with YouTube. It's going to be really, really good. Preparation, right? When preparation meets opportunity, that's when success comes. So I'm getting well prepared here, and I'm helping other people also get prepared. But the opportunity is going to be in the market. The MM book tells us that sell in May and go away and come back in August, to late August or September. So it's getting near August, guys. So that's where we're kind of coming back, and I need to hurry up and complete these plans so that we can do and accumulate good money when it comes to 6 to 7 months from now, right? From September to May. That's where the trading season really happens. So let's stay tuned. Definitely stay tuned. And yeah, anyways, so accumulation, the guys basically accumulate. Okay, they take Bitcoin, and we saw that the support was on the 4th wave. So that's where they wanted to accumulate demand. And guys, I don't know if Bitcoin is an actual strong demand asset. I don't know if the government or if Tesla and all these other companies want to buy this. All I know though is that the big banks did open up shorts. Okay, I'm almost 100% certain that they opened up some big shorts at the top of the market to push down the prices in order to accumulate more spot. That's my, that's what I think they did, and to accumulate more spot. That's why it's interesting. It's important to have a nano ledger or offline wallet, because I don't trust any of these exchanges, because I don't think they all have their Bitcoin. It just, like, I don't think it's mathematically possible, and especially if you're trading futures or perpetuals and stuff like that, those are not Bitcoin. Those are paper money. So if you count that and do the math on that, if all the futures disappeared, or if there's a panic on the futures market or something like that, hopefully that it doesn't happen, but all that money, even in USDT, if there's money sitting on USDT, that thing can go to zero. It's going to be really who's first, you know what I mean? Because everyone's going to be dumping into the real spot Bitcoin. So that's why it's kind of important to have some Bitcoin on spot. And that's really all I'm going to say. That's, again, market thinking, psychology of the markets, right? And so you got to think about these things. These are good plans. And anyways, let's talk about the accumulation phase. This is also called the buying climax pattern. It's in here. It's a little bit more detailed on what happens here, okay? I'll show you here. Buying climax pattern. This is better than the doc anyways, right? So the buying climax pattern is this one here. So anyways, there's a high volume, right? And this is often where the over-leveraged short traders get trapped and need to close their position. Market psychology. Looking for longs, lower wicks, right? Market buying. It means they're market buying. Cause the wicks. The only way you can cause a wick is either order book manipulation or, but see the volume? This is real buying, market buying. Okay, so let's go back on the bear stage analysis there and distribution. Okay, so this is the uptrend. This is when we break out and basically the market makers stop selling. Okay, we're starting to make uptrends, higher lows and higher highs until the market basically shoots up. Okay, one of the challenges in trading is to hold your winners, right? So, and no one to hold them, no one to fold them. So like this one right here, would you have sold here? Would you have sold here? You know what I mean? So that's why we're doing this. This is why we're forming the whole market structure and building plays on number one, which is VPA, in my opinion, because VPA is the whole market. It covers the whole market. And if you guys know Super Trader, Van K. Tharp, he has 6 different market types. Let's get into them. So there's sideways, okay? Sideways slow, sideways volatile. There's upwards slow and upwards volatile. That's 4. And then there's downwards volatile and then downward slow. Those are 6. And then Gann has 7 zones of activity. So yeah, I'm really going to cover Gann later. I just have to, I've read all of his books, but I haven't did what I did here, like written down the rules and stuff like that. And I will. And that's my 2-month plan. And it's going to be good. And hopefully the community can grow. I'm also going to devote probably an hour or 2 in order to the Discord and seeking out people that are hungry for trading and for life, for goals and stuff like that, right? And like the markets. So anyways, the uptrend continued, and then distribution. Finally, the market makers basically distribute. You'll see, and this is also the selling climax pattern. Like we saw, this was the buying climax where there's going to be lots of buying in the wicks. This is the opposite. So selling climax, lots of wicks, and then lots of volume. The volume should be there, but it doesn't have to be there. Just the wicks and no more buying, no more buying. And that's the thing with going downwards, because if there's no volume here, the longs are screwed, and there's no more demand. Let's say this was the 4th wave. and it broke, it's literally going to go back down here. So if we break that fourth wave, we're probably going to go down to like 20, 15, or 10K on BTC. But we did a very nice move on the daily. We are getting wicked though. Let's go to I'll end off the video here to support and resistance. I wanted to show you guys here because this is important, because this one here, right? So this is range. There's a ceiling of support. This is the ceiling or the top. And there's the bottom. This is what we call the floor. Okay. Next picture. Next picture, it basically explains the emotions. Okay. There's cycles of emotions, and at the top and the bottom is a little bit different. And that's kind of what we're doing right now, right? We're in a channel and we've got a lot of like this one here was buy on greed. This one here was sell on fear. So what you want to do here is flip the switch on the psychology, and you want to buy the fear, excuse me, and sell the greed. So that's another pattern. This one's a little bit tricky, in my opinion. Like, I like to trade trends, uptrends and downtrends. Channel, they give really good risk rewards, but I mean, look at Bitcoin's trends, right? The pullbacks I like a lot. You know, this was a bull market, but right now when we're kind of like this, it's a little bit more tricky. And I bet you Elliott wave theorists are gonna think that this is like a 3, and a 5 or something like that. But we're not into that right now. We're just literally thinking about like the market psychology and things like that. Okay, let's talk about a little bit about Gann and Gann's rules, his technique. So remember the rule here, right? It's called the floor and the ceiling. So what Gann also says is right here. So Gann's support and resistance rule. I have to double check and confirm. So previous tops, ceilings of resistance, become bottoms, and previous bottoms, floor of support, becomes tops. Okay, so this doesn't prove my point that I wanna make, because I have to make an edit and make another one. But previous tops also become tops. Here, let me just go get the rule. It's in this book right here. It gave me a really good idea, because that's basically just like this. Previous tops becomes resistances. When broken, sorry, I had to add that. So once it gets broken, did it get broken? No, it didn't. So it doesn't actually count right here. But it did get broken here, right? So it does count. Now it counts. So look, but it is far away. So, I mean, it depends how you look at it, right? I still think it's going to be a resistance, but we just got one resistance, 1 and 2. So that's how channels form, right? This is a greed, buy on greed, right? So that was your resistance. But yeah, this one right here this was a ceiling, a top, and then they basically broke it. There's a rule for how far it can break it without being invalid, but I don't like to share that one because it's a stop loss rule. Okay, and maybe I'll get into it some other time. But yeah, anyways, that's my update for VPA. I hope you guys like and enjoy this this video. It took me a lot of time. I mean, there's 32 pages, basically summarizing 300 pages of VPA. Let's take a look at MM and see how many excuse me pages we have on MM, because that's only a 200 page book, but it's really full of trading wisdom, trading knowledge. I don't even know how I'm going to put it into the Discord, because I have so much in there, and I have to edit this. I haven't edited it yet, but I just finished putting my handwritten notes into the Discord. I mean, into the docs. So 20 pages. Or wait, hold on, it's still loading. So 30 pages of MM, and it's basically just rules on no pictures on this one right here. But what I'm gonna do is, I'm just like Elliott wave, right? There's a lot of rules on Elliott waves, but it's a really good strategy if you know how to simplify it. For example, buy the wave 2 or buy the wave 4. You just need that system. Some people like it. It trade your own personality. That's why I need more traders than so obviously this would be the wave 1. Forgive me for this. Whoops, what am I? Okay, so just like that. So that would be wave 1. Wave 2, we know that it retraces to like the 61.8, maybe a little bit lower, but cannot break wave 1. That's our rule, right? Of course, everyone kind of knows it, but here's the skill, is that the next thing right here. And the MM, we're actually going to talk about it a little bit here. That's why it's important to know Elliott wave theory, right? Because if you know the MM, which is the measured move, this would be invalid. But when it comes to Elliott waves, wave 2s often retrace very low, and wave 4s often retrace to the 382, and then it continues up like that. Okay, whoops. And again, it's all about the algos, so they might actually overlap it and say that this is depending if this was a zigzag, it'll be like that. That's called the rule of alternation, and it will come and test the 382 and then do the 5. You know what I'm saying? So that's Elliott wave theory, and of course this would be the 1, 2. This would be the 4 right here. This is the buy zone, especially on lower volume, and you're going to see the lower volume, and then wave 5 upwards. And wave 5, if it's a double top, it's going to go down a lot. But if it's actually a continuation of a trend, then it's good. That's why I like using volume as the most. That's the best way to do it, in my opinion. So yeah, this is Ethereum. Ethereum didn't, you know. So what else do I have to say? Might as well take a look at the MM. So basically the MM, if you guys haven't read the book, is and I will document my trades here, and I'm going to go through all of my spreadsheets and stuff with you guys. I want to bring as much value to others as well as myself, because it does help me. It does help me also. So this is the MM. The profit target right here is the red line, and then the entry would be the green. So more on that in the Discord coming. And basically there's also rules. If it passes the profit target, it hits, like, let's say the 618 up there, then you have something else on your hands, and we have to start pulling them differently. You'll be surprised how often this strategy works. Because why? This is the main point of this strategy, is algorithmic systems that control the markets. That's what it believes. So you'll go on the daily chart, and then you'll scalp it down on the 15. That's what the system's all about. But in crypto, we might have to tweak the strategies, and that's why I'm saying the Elliott wave principle and Fibonacci is a really, really powerful strategy. And I would have to say it might just be better than the MM, although I like how the MM as an entry, a stop loss, and a profit target. And that's all I had to say for today. I hope you guys like and enjoy this video. Please subscribe and share to anyone that you think would gain value or benefit from this community. Peace.